Hey traders, this is Christian from Tribeca Trade Group with your end of day recap from Monday. And wow, what a day! We traded in a really tight range, but I guess that would be one of the few complaints that if you really wanted to complain about today's price action, that's what it would be. And possibly not having, if you didn't have a ton of positions on right now, it may have been a little bit frustrating because when days where we gap up, there's just not going to be a lot to trade. So, just a quick recap of where international markets really that kind of was the major story for today. And they've pretty much closed on the highs. So Euro stocks closed up 4%. The CAC was up well over 4%. The DAX up 3%, so on and so forth. Just green across the board here in Europe. And just to kind of see how these things, sometimes you want to see how these things close, if they close on the highs or if they faded. They closed on their highs. So really nice price performance. If you were long, like I was, Fez, which is the Eurostox ETF, that was up over 5%. So why, you go back to these indices, the Eurostock was up 4%, and Fez, which is basically tracks the Euro stocks. Why was that up 5.6%? This is something that we really hammered home last week in terms of international ETFs. They have exposure to the euro, so every once in a while, every once in a great while, you will have a kicker of the euro going the same direction. Mainly, it's mostly with international equities. It's usually the currency goes down and the equities go up, which can negate the returns. But in this sense, we had the euro go up 1.5%, so it becomes additive to what the underlying equities did. So 1.6% plus around plus 4 percentage points in the euro stock gets you to up 5.6% in the ETF. So I took some profits in this today. I mean, I think you kind of have to with a gap up like this. I'm holding some more for continuation because we're still way below, and this is why I've been in this group. As well as emerging markets, is because it's still very much lower than where it's been in in years past. So it's kind of a catch up trade. It's also just a play on the change on the trend changing. Since we got above the 200-day moving average, is basically when I got long these. And if we go to since then you want to remain long. We had a nice pullback to the 50-day moving average in the Fez ETF. Same thing. I've been detailing this as well in the. I've been detailing this as well in emerging markets. They pulled back to the 50-day moving average, found support, and took off. Look at the volume today in the Fez ETF. So, I think this is confirming the trend. I think there was some. I think there was some weak hands in the market last week, and who got out of Europe last week. We saw that in a couple different ETFs. We saw that in the European Financials ETF, EUFN. So the smart money or the big money isn't always right because there were outflows in this. There was outflows in EWQ, which we talked about quite a bit last week. So you get a little bit nervous when you see a lot of money come out of the market, but a lot of times these guys are not right. So EWQ, look at all the volume here, and this was detailed. We detailed this in the weekend newsletter. How there was some money leaving, but they really, if you're a trend trader, they did not break down. They got close to it at the 50-day moving average, but they did not. So, really, that's the big story of the day. How it affects us is our market got a kicker. I heard on because I shot the video a little bit late. I heard the beginning of fast money, and they're like, "Well, we're still making lower highs." Really? That's really what you're going to go with? That it's negative that we're up 1% today. What about the Nasdaq? Are they making low? Is that a lower low to you? No. That's an all-time high in the Qs today. What about small caps? Bad there? No, they're now out of this downtrend that they were in. They were making lower lows and lower highs. They're now starting to break back above again here. So I do like the small caps here. I also like markets when small caps start to outperform everything else, or the large caps. And that's what we had last week. Small caps were up 2%. So it's a continuation. I said that in yesterday's video. I shot yesterday's video around 12 o'clock Eastern yesterday. and I said, hey, let's see if we can get. It was 1 week of outperformance in small caps, which again I generally associate with risk on markets, and certainly we got it a little bit more today. It outperformed by 15 basis points. Besides that, transports are really strong. I mean, these are really good things to see. These are not bad things. If this was things breaking down, or not participating. Did the transports make a new high today? No, they didn't make a new high today, but you could kind of see this could be a W pattern here. They were up 1.6%. Financial in sectors, financials led the way. They were up. XLF was up 2%. You kind of go through the whole. The majority of sectors did really well today. For example, steel names were up 2%. Metals and mining up close to 2%. Biotech was up 1.7%. The robotics ETF, which is on my watch list, was up 1.6%. Semis up, which I still still like the semis a lot. I think it was a great buying opportunity last week in the semis. So they're right back to where they were in terms of the trend. So quick break, and that's all you get, for 2 weeks. Heightened volume on the breakdown. We talked about that over and over with what we saw here with outflows, and anytime this thing seems to break and then reclaims like it did here, and here, it's been a buying opportunity. So really strong in semis. Industrials were up 1.4%. Defense names up 1.3%. That's ITA. Just across the board. Strength. Is the game won? No. Every day it's a battle. So, we do have a very big week of earnings. So, is it unusual that the markets rallied ahead of earnings like this? I mean, obviously we just had a big event, so I think it's really a one-off. But we still have a lot of earnings names to get through. So what did we see today in terms of option activity? A huge buyer in Microsoft. 24,000 of the October 67 and a halves. Microsoft's been pretty quiet in terms of option activity. If you remember a couple earnings cycles ago, we saw a lot of calls go up into past reports, and it's acted pretty well. But over the last month, I mean, it has been going up and to the right. It's just been doing it very slowly. I guess if I want to complain, that would be my only complaint, is that it gapped up for earnings, and it's basically was at the same point for the most part of the last 3 months. Now it's gapping up. So we'll have to see what's gonna. It's. I would have much rather play an earnings trade for Microsoft if it had not done this, but it could mean that there's just more upside for Microsoft to go. If you want a little bit, if you don't want to play these names, Microsoft and Google, because Google also had a nice day today, up 2.3% and also breaking out ahead of its earnings report. There was a nice buyer of the XLK ETF today, which is technology. So Microsoft and Google you add these two up, and they're an over 20% weight in the XLK ETF. Amazon is not in this ETF. That's in the consumer discretionary ETF. But if you're looking for a cheap way to play a continuation or a further breakout move in Google and Microsoft, you could buy this week's XLK. They went out to this trade in particular was May, but if you look at the weekly calls, which I know are very risky, but you're not really paying much for them either, you could buy something like the 54 calls for like 18 cents, 17 cents. So if you want to take a very binary approach to going long these names, now obviously you'll need both of them to react well. If one goes up and the other one goes down, meaning if let's say Google goes up and Microsoft goes down, it's going to negate the returns in the XLK. So you kind of need both to react pretty well. So, but that's an easy way to put on a trade. If you want to go further out, then that's the trade that went up. This was swept, 10,000 calls. The XLK May 53 and a half calls went up. So besides that, I don't think I talked about the VIX. The VIX absolutely smashed today, 25%. It was definitely positioned the right way for this. I was short a call spread in the VXX going out to June. So really nice profits on something like this. I didn't think it would be down. The VIX would be down 25%. Usually when you have events, it's really great to put on these trades right before the event, because you do usually get a VIX smash down uh, right once the event is out, either as positive or negative. The VIX usually goes down once the cat is out of the bag, once the event happens. So a good example, this is if you didn't have a VXX trade on, or if you weren't essentially short by selling call spreads like we were at Tribeca Trade Group. This is something to learn from. Volatility will always increase, not always, but for the most part, will increase into an event. And then once the event happens, it comes right out. So we're back to the lows in the VIX. The fact that we went down a little bit, not a little bit, but if the fact that we went down 26% is a little bit of scary. It is a little bit scary because the VIX is so low again, all the way down to 1084. I'm much comfortable when there's a little bit of fear in the market. Not when it's down to 10, but so you can't have everything perfect, and that's never going. Things are never going to line up perfect when you look at some of these things. Gold actually gold and hung in there today. It was down much further in the overnight markets, but really only down 90 basis points, which gold has those types of days. So gold, you could still be long versus the 200-day moving average, but I was not long gold at all. I didn't like the price action in the gold miners last week. I thought that was a really good tell. The gold miners have failed a couple times here at the 200-day moving average, and just a good, if I saw GDX really rally last week, then I would have considered a long in GLD. We certainly saw a lot of gold, bullish gold plays last week, and they did go further out. I think there was another one today. So somebody was taking advantage of the dip. There was some July 119 calls. So I think gold, while it's above the 200-day moving average, is a could be a place in my portfolio. I don't have anything on right now in gold. I actually liquidated ABX at the close today because I didn't want to hold it through earnings, which I think was a smart move because it's down. But I think buying gold on the dip or retest of the 200-day moving average may not be too bad. Also, bonds were down today, but they didn't completely crumble. They found support at the 20-period exponential moving average. So TLT was down 0.5%. Not horrible considering the what the VIX did today and what equities did today. So you could still kind of own some of these yield plays. And so I might look at gold, considering we continue to see buying going on, and as long as it's above the 200-day moving average, I think it's a good diversification if you have a lot of equities in your portfolio. So I like gold a little bit more than I like bonds right here. Bonds are still underneath the 200-day moving average. What else for today? And then just even as great as today's rally was, we still have to. I think it's 37% of the S&P reports this week. So I didn't actually take really any new trades other than put that little XLK trade on. I put a couple earnings trades on, but really I was taking targets and today and taking off risk on a day. On a day where we gap up like this and we still have a lot of events to get through. So I'm still positioned long, but I certainly took a hell of a lot of targets today and took some profits and a lot of things, and still riding the trend and a lot of names. I'm still long Lowe's, Micron, which didn't do too well today. Really ugly performance today, down 2.75%. Kind of got a hint that something wasn't right in Micron on Friday, where it had a bearish engulfing bar. So, my stop is going to be around this 20-day moving average. If it holds, great. And I'm long a longer dated play in Micron. If it breaks, then I need to get out of it. So, am I thrilled with today's performance and SMH seeing it down that much, considering that semis were up today? No. So, I may be hitting a stop price in that if it continues to underperform in that one. So it is what it is. Other than that, I'm still long Fez and a few other names. So thanks for watching today's video, and I'll see you guys back in the Tribeca Trade Room tomorrow morning. A ton of names are reporting tomorrow morning, so we'll have the room open a little bit earlier. Thanks, everybody. Have a great night.